Today, I want to take a closer look at my top 3 AI chip stocks that I'm currently keeping a closer eye on. I actually did an episode on this earlier this month, but we have earnings happening already and a lot of changes happening to the overall semiconductor space that I wanted to kind of share my overall thoughts of what's happening, especially with these 3 stocks. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the first stock I think investors should kind of keep a closer eye on is AMD, Advanced Micro Devices. The stock is now sitting at roughly $151. So when I did my initial episode in July, this stock I think was closer to 160, maybe 170. And I mentioned that, hey, look, I really like this stock at the 150 levels, and I'm happy we're getting here. So AMD, in my opinion, can definitely benefit from a lot of different avenues. And one thing is, we did kind of get some confirmation from recent earnings. So TSMC reported earnings last week, and they mentioned that there's still a huge strong demand for AI accelerators. We also did get ASML that reported earnings, and ASML reported that AI is driving the demand in semiconductor space in all end markets pretty much. So that's obviously the PC space as well. And if you follow AMD, you know that those are 2 markets they hit. First is the AI accelerator with the MI300, the MI325, 350, and the MI400. And in the PC space, they hit the AI PC race with their CPU and GPU solutions. So right now from earnings, we do have some evidence that those 2 markets are expected to see a nice tailwind. And let me just say that, let's start off with the AI PCs race. We recently heard news that Dell executive returns to AMD to lead the PC business. And not only that, we are hearing reports that Intel's 13th and 14th generation CPU are crashing and creating some kind of instability and definitely leaving some bad taste in the consumer space. So while we are seeing kind of the consumer PC market picking up, we're seeing AMD's competitor may be lacking one way or another. So I believe this can definitely be a nice benefit for AMD's client side, which is one of their biggest core product with their CPU, the Ryzen processor. Now, we did hear from TSMC that the AI accelerator market is also growing and continues to have huge demand. AMD is definitely not a slacker in this space. They have the MI325X releasing later this year, in 2025, the MI350, and more importantly, in 2026, the MI400. So AMD, in my opinion, is nowhere near an Nvidia. But just because it's not an Nvidia, it doesn't mean it can't benefit from the AI market. I believe AMD will be able to take some kind of market in this AI accelerator space, and they will be able to boost their revenue. Again, I don't see this being a $1 trillion, $2 trillion, $3 trillion company anytime soon like Nvidia, but I do believe this is a stock that can multi-X within the upcoming years because of these solutions. So right now, the MI400 is probably the one I'm most excited about because the MI400 promises the kind of ability to do large clusters. And this is something that Nvidia has over all the competitors right now. So AMD, as long as this AI space continues to run, as long as the AI accelerator market continues to be big, I believe AMD has the potential to really give some great returns to investors. And that's why for me, it's staying as my number 3 position in my overall portfolio. It used to be number 2, but now Tesla has overtaken that. Now, if we look at PE ratios forward 1 year, AMD is sitting at 27.21. I personally believe that these obviously are based under analysts' expectations for the upcoming years. I believe analysts are underestimating how much revenue AMD can make from the MI series. And for that reason, I think once they report earnings for the upcoming quarters, they are going to continue to raise their guidance. And in theory, these PE ratios are much lower than they really are going to be in the future because AMD is going to provide better results than expected. So again, AMD, in my opinion, is nowhere near an Nvidia, but just because it's nowhere near an Nvidia, it doesn't mean it can't outperform the overall semiconductor space. So that's my first stock. And let me say, this is not stock number 2, but Nvidia right now sitting in the 1 teens. If you have watched my previous episodes, you know that I am really excited of Nvidia at these levels, and for me, this is light dollar cost average for Nvidia. In my opinion, for AMD, based on all the other market opportunities as well, this is kind of like a mid to heavy dollar cost average for AMD for me. So those are just my overall thoughts. Would definitely like to hear from you, the viewers. Now, before we go any further, I do want to say thank you all for the support on my ebook. My ebook is kind of a semiconductor handbook with over 50 public semiconductor companies demystified, with summaries, some amazing FAQ sessions. If you haven't picked it up, make sure to click the link down below. And right now I am running a sale, so it's actually cheaper than the price you see here. And I'm not going to be running that sale forever. Definitely click the link to learn more, but appreciate all the support. Now, stock number 2 is Aehr Test Systems. And Aehr Test Systems is one of those stocks that has actually seen a nice return in the past month. The stock is up over 76%. When we took a closer look at this, the stock was sitting at roughly $12. And in that video, I explained how this was an AI company as well. And after these earnings, my thoughts seem to be coming true. So Aehr Test Systems right now sitting at a market cap of $551 million. While the stock has run up a nice amount in the past year, the stock is still down over 60%. So this is going to be a very, very volatile stock in my opinion. But I believe in the long term of things, if it does execute correctly, this can easily be at least $1 billion company. And you might be like, Jose, what does this company do? So they provide kind of burn-in test solutions, or kind of like a stress test supply equipment that is used for mainly the EV market. And right now, the EV market is obviously in kind of a downfall. So we have seen their revenue kind of decrease in a bit. But right now, they are seeing that the silicon carbide device is going beyond EV markets such as solar, data center, and other industrial applications for power conversion. So we see a growth opportunity there. Then they're also seeing several emerging opportunities from a huge amount of markets. For example, one of the markets is using the stress test on AI accelerators and AI processors. Now that is obviously a very, very trendy topic. And if they are definitely going to get customers here, I believe this company can outperform revenue for the foreseeable future. They even made an acquisition of a company to make sure that they have plenty of products for AI accelerator burn-in test solutions. The acquisition that they made was of Incal Technology. Aehr Test Systems also mentions that they are currently working with an AI accelerator company and have secured a commitment from them to evaluate their Fox solution for use in production wafer level burn-in of their high power processors. So obviously this is one of those companies that has a lot of tailwinds if executed correctly. But with a company like this, obviously very small, comes with a lot of risk. If they don't execute correctly, then the stock price can go down. In my opinion, based on what I'm seeing, the EV market obviously could do well in the long term of things. Not only that, as we read, silicon carbide can be used in other industries as well that also have a nice tailwind. And obviously with their addition of AI accelerator burn-in test acquisition, this also has another avenue to grow. So for me, while Aehr Test Systems has definitely seen a nice run up in the past month, I believe this stock can be a $1 billion company at least in the foreseeable future. So I'm still very much into Aehr Test Systems. Obviously, volatility can kick in after 76% in a month. I don't think it's impossible for the stock to drop, but this is one of those to dollar cost average in my opinion over time, and that's what I'm going to continue to do. So right now, Aehr Test Systems PE ratio for 1 year, which is pretty much 2 years from now, is sitting at 21.85. I believe a lot of analysts are underestimating the acquisition, are underestimating the EV space, and this is a stock that's definitely sitting at attractive levels when you look at the long term of things. Now, the final company we have here is Marvell Technology. So when I did my episode previously, Marvell was kind of sitting in the 72s, 73s. Like I mentioned, I really do enjoy Marvell Technology in the 68s. We're actually sitting at levels below that at 66. So this is one of those stocks that I'm actually actually going to continue to add on into and increase my overall position dramatically. So Marvell Technologies, one of their biggest things is they do have kind of custom compute accelerated solutions. They also have a lot of networking solution, and based on their most recent earnings, they mentioned that the accelerated custom compute can be a huge market opportunity for them, growing at a 45% compounded annual growth rate within the next 4 to 5 years. And like we're hearing from every other AI company, AI accelerators right now are seeing huge demand, and I believe that's going to be the case because AI is definitely going to change the world in the long term of things. So Marvell, in my opinion, is one of those stocks that's sitting at $58 billion. I can't see why this wouldn't be a $100 billion plus stock. Again, another stock that I believe can outperform the semiconductor market, and those are the ones I'd rather invest in. So Marvell, obviously a lot of competitions with company like Broadcom. I believe there's huge potential here, and I'm really excited for their upcoming earnings. Now Marvell's PE ratio for 1 year sitting at 27.4. I personally don't think that's super high in my opinion, based if they get the AI accelerated compute market right. Now, like I mentioned, most of the stocks here have a lot that they have to prove. And that's why I invest in individual stocks, because I believe they can prove these right. But at the end of the day, that comes with the risk, and the risk can obviously make these stock prices drop down. So let me know your thoughts. Are any of these catching your attention right now? AMD, Air Test System, Marvell, or would you rather just stick it out with Nvidia or a semiconductor ETF? Let me know in the comments below. Take care, have a good day, and see you next time.